Hello everyone, I am Nelly Danco Herrera, Project Officer at the European Urban Initiative, and I will be with you for the whole session. My colleague presenting today will be Srinka, Finance Officer at the Permanent Secretariat, and myself. We will be accompanied by our Project Officer Maya, who today will be helping us with the question and answer part. This event is recorded and will be available to rewatch it later on to help you putting together your application form, considering all the financial aspects and rules we have. We will be using the Slido to collect your questions. So as you already know, you can use this Slido either from your browser or with your mobile phone. You can enter the event number or use the QR code of the screen. You will have the opportunity to see the questions that others are asking, and you can use the like button to push up a question to the top. So let's test the Slido together now. Maya will ask you some questions to start the presentations. For us, it's really important to get to know our audience and the level of your knowledge regarding the topics we will be presenting you today. Maya, could you please start with the opening questions we have for the audience?
Thank you, Nelida, and welcome to our audience watching online. As Nelida explained, we have a couple of questions to get to know you better. So let's move to our first Slido question. Where are you joining us from today? And no, I don't mean your home office, but what city in the European Union are you joining us from? Let us know by answering the Slido. Let's give you a few moments to log into the Slido. Please let us know by writing into the Slido what city you are joining us from. Maybe we're waiting for people to log in for a few moments. Take your time and don't be shy. Please let us know. Oh, wonderful. We've got our first few cities through. Fantastic. Thank you. Keep them coming. Great. Wonderful. Thank you so much. A nice geographical spread here. Wonderful. Any more cities in the European Union? Okay, we have a few more participants joining and a few more participants typing, but we'll slowly move on to our next question shortly. Thank you so much for letting us know. So, moving on to our second Slido question, what is your current role in the organisation you work for? Maybe you're a finance officer, or a project manager, or an account manager in your organisation. Let us know by answering the Slido. Some project managers here, which is great to see. Thank you so much for joining us today. Head of European Projects, hi, welcome. Thank you. Please keep your answers coming. It does look like project managers are the most common participant with us today. That's great. Thank you so much. Okay, next, we want to hear about your experience of EUI financial requirements. So our first question on EUI financial requirements is, have you read the guidance finances part prior to this online session? The answers are yes, partially, or no. So I'll repeat the question. Have you read the EUI guidance finances part prior to this online session? 76% of you so far have said partially. That's great. For those of you that have said no, you're in the right place to begin your learning journey. Thank you so much for answering the question. Around half of you have read the guidance, so that's fantastic, or just over half of you, actually, more than half, should I say, and only 16% of you know, so that's a great turnout. Thank you so much. Moving on to our second getting to know you question. What is your level of understanding of the finances for an EUI project? Wonderful to the person who has some solid background, and great that you're joining us today to learn some more. Keep our answers coming. Thank you so much. We even have an expert in the room with us today, which is great. Thank you. Hopefully by the end of today's session, you will learn more and increase your knowledge. Thank you so much for answering your questions. More participants joining us. Thank you. I'm ready to now hand over to Nalida for the rest of the presentation.
Thank you, Maya. The idea is really to make sure that after today's session, you get to better understand the financial rules and be able to build your project budget. So let's have a look to the agenda of our session for today. For the next 2 hours, together with my colleagues, we will explore the funding principles of the innovative actions projects. Then we will check the eligibility of the project expenses, and then we will build together your project budget with one example. Then this all will be followed by a 30-minute question and answer as part live that will be followed by a closure and what's next or other steps for this session. To start with the presentation, I will do the funding principles part. For the funding principles, you will get to see that in our slides, I put in parentheses or in brackets the section of the guidances that you have to look at. So this will facilitate to your memory and go immediately to check in our guidances which section we are talking about for further details. The European Urban Initiative, Innovative Actions, follows the total cost principle. The project receives ERDF for co-financing up to 80% of the eligible cost. Every partner, main urban authority, associated urban authority, or delivery partner, and transfer partners receiving ERDF needs to secure the other 20% of at least public or private contribution to complete this budget. This budget or contribution can come from either own sources of the organization, from other sources of the organization. It can be in cash, it can be in-kind contribution. Note that this contribution can not only come from EU funding source. We cannot allow duplication of funds. In the table below, you will have an example of a project using the maximum ERDF funding, which is €5 million ERDF, which makes the total project budget of €6.25 total eligible cost. Remember these acronyms that we are using: ERDF for European Regional Development Funds, and TEC for total eligible cost, because later we will be just mentioning this in our next slides. So, the Innovative Actions Payment Scheme is mainly based on the principles on advanced ERDF payments and ultimately on the reimbursement of costs that you will be actually incurring and carrying out during the implementation phase. An Innovative Action project will receive the approved ERDF in 3 installments. The first advance payment, which is going to be equivalent to the 50% of the approved ERDF, including the lump sums for preparation and initiation phase, are to be paid upon the successful completion of the initiation phase. The second advance payment, equivalent to 30% of the approved ERDF, is paid after the submission and approval of the first financial claim of the project. And then the third payment, equivalent to the left 20% of ERDF, including the lump sum for closure, is paid after the submission of the final financial claim 2 and the final qualitative report. So now let's talk about the eligibility of the project expenses and enter into the cost options we have. So given the experience of the former Urban Innovative Actions Initiative with 86 projects funded and almost €300 million of reported expenses, the European Urban Initiative has opted for a greater use of simplified cost options as one of the most important simplification measures encouraged by the European Commission. This with the only aim to allow an easier access of small beneficiaries to ERDF funding, reducing the reporting and administrative burden and the cost related to this, lowering the error rate in the reported expenses, and allowing a quicker control of the project expenses, in consequence, making possible a faster payment to the projects. For this new programming period, we keep working with 6 cost categories. Before, we used to call them budget lines. So we have these 6 cost categories now. These are staff costs with 2 SEOs, SEOs, I mean by this, simplified cost options. We have two options for staff costs, which are flat rate and the standard scale of unit cost. The second cost category, office and administration, with flat rate, another type of SEO, simplified cost options, based on the staff cost. The third cost category is travel and accommodation with a flat rate or another SEO type based on the staff cost as well. Then we have the fourth category, which is external expertise and services based on real cost. Then we have the fifth category, equipment, based on real cost as well. And finally, infrastructure and construction works based on real cost. For each cost category, a definition and rules are provided in our guidances. Please note that the rules are applicable to the main urban authority, associated urban authority, and delivery partner that will claim most of the costs that they will be incurring while implementing the project, but not to transfer partners, because their expenditure, the expenditure of transfer partners, are covered by a lump sum. In case of DAPs, please, when allocating the nature, according to the right nature of the cost, do not hesitate to contact the permanent secretariat. The eligibility period for a project expenditure corresponds to the project implementation period. To be eligible, cost of a project activity, this must be incurred, carried out between the project implementation start date and the project implementation end date, and paid before the submission of the second financial claim to the auditor, by auditor equal first level controller, for the validation of those reported expenses. It is important to note that the eligibility of expenditures related to the thematic work packages end with the end of the thematic work package. As you can see in the graph, there are the thematic work package are marked in blue bar color. So that means that eligibility of expenditure for thematic work package will go only up to the 3 years, as we are seeing in the graph. Any expenditure related to the thematic work package, blue color again, incurred after the thematic work packages will not be deemed eligible, because for the left 6 months, we only be considering eligible costs, all related costs to management, monitoring and evaluation, communication and capitalization, and even the work package transfer, because these are the horizontal work packages we call. The other phases of the project implementation, well, of the project itself, not really implementation, because the implementation happens where we have the color of the bars. We have project preparation, initiation phase, and closure. These are covered by lump sums. Now, we have a quiz question for you. Maya, could you help us with the quiz question?
Thank you, Nelida. Audience, are you ready for our first quiz question? Our question is there a budget limit for the project's application? So to repeat the question, is there a budget limit for the project's application? Is the answer 3.5 million ERDF, 6 million ERDF, 5 million ERDF, or 6.25 ERDF? Don't hesitate to pick an answer to the question. I can see we have some participants in the room. Is there a budget limit for the project's application? Please go ahead and select the answer that you think it might be. Wonderful, we're starting to see the answers coming through. Just over half of you think that 5 million ERDF is the answer to the question. Nelida, I think it's over to you for the right answer.
Thank you, Maya. Indeed, the right answer is 5 million euro ERDF, which totals to 6.25 million euro tech total eligible cost. Maya, now we take the questions from the audience related to funding principles, please.
Thanks again, Nelida. Are we ready for our first audience question? The audience question is it possible that one of the partners ensures the entire co-financing or contribution value? So to repeat the question, is it possible that one of the partners ensures the entire co-financing or contribution value? Nelida, do you have an answer for our audience?
Yes, I do. Yes, it is allowed that one partner covers the co-financing rate for one or several or even the entire project partnership. In that case, this partner should be explicitly mentioned as the source of contribution in the dedicated section of the application form. It is to be noted that the partner's contribution can be in the form of cash or in kind. Maya, do we have another question?
Thank you, Nelida. We do have another question, again about the contribution, but this time specifically to in-kind contributions. The question is, can an individual partner cover the total project 20% contribution with in-kind contribution alone with a combination of real estate and land? To repeat the question, can an individual partner cover the total project 20% contribution with in-kind contribution alone with a combination of real estate and land? Nelida, over to you for the answer.
Thank you, Maya. Yes, if the project goes for full in-kind, the land can represent the maximum 50% of the total project budget contribution. So 50% out of the 20% contribution. Why? Because for purchase or provision of land, we have a limitation by the regulation, which is we cannot provide land more than 10% of the total project cost. So what a project can do is use this coverage of 50% of the in-kind contribution in the form of land provision, like covering this 10%, then add the other 10% either in the means of unpaid voluntary work, services, rent, equipment, studies, goods, I don't know. Let's, for example, think of an example that the project wants to value a building and a land where the building is located. And to value both, the project needs to estimate these both elements, and we need and reflect it in the application form. So we need to make sure that we are not exceeding the 10% limit in what is regards to land provision. So thank you for your questions. We will take more questions at the end of the presentations today for funding principles. Now is the time to look at the second part of the session, which is about the eligibility rules of project expenses after the video that we have for you.
Greetings on my side to everyone who is watching us live right now and to everyone who will watch us later on the YouTube channel. As Nelida introduced me, I will be presenting the eligibility of project expenses. As most of you, as we can actually foresee that you already planned your objectives of your project, that you already set the result you want to achieve, match them with the activities which will help you to achieve them, and set deliverables and outputs of your activities. Now it's the time for you to start planning your budget. That means that you have to know which costs of those you want to plan will be deemed eligible. And this is what I will try to cover in this session. As Nelida also presented before, there is a variety of simplified cost options which European Commission is trying to enforce in order to allow deburdening, administrative and reporting deburdening of the project partners inside of the project during the project implementation period. So in the EUI, we also proposed a couple of options which our beneficiaries can use as simplified cost options, and I will try to explain which are those. So first of all, there are lump sums. As Nelida said before, there is a single sum of money which is provided to the beneficiary, and it's tied to something which we call payment trigger, and it's actually predefined terms of agreement on certain deliverable or output inside of the project. So where did we get this amount from? Is actually the answer is that we actually relied on the historic data and approximated the amount to what usually projects were using before on the real cost basis. So as you can see, we have a list of lump sums which project can use. And first of all, we have a project preparation. This is a period in which you will spend some resources, and we've foreseen 25,000 euros total eligible and corresponding to 20,000 euros ERDF amount for projects for their preparation of their project. The second one is initiation phase. We know that since we award the ERDF to the project and the actual start of implementation, there is also resources which will be spent in order to prepare project for the implementation. And this is why we provide 75,000 total eligible cost euros for initiation phase, which will be lasting for 6 months. Also, at the end of the project, as Nelida also mentioned before, there will be a project closure, so it will be a period of time in which you will be performing all the activities related to prepare your project for a financial and other closure, and for this we foreseen 20,000 total eligible cost for these purposes. Also, there is a novelty in this financing period 2021-27, and we have in each of the projects, you are required to build in the transfer partners, the 3 transfer partners, which you have to name by the end of the initiation phase. And for each of these partners, we provide a lump sum of 150,000 euros of total eligible costs to provide possibilities to transfer the knowledge and the solutions which were tested inside of the project implementation. The other type of simplified cost option is our flat rates. These are actually very attractive options, and these are basically specific categories of eligible costs which are identified in advance by programs, by initiative in this case, and they act as a percentage which is fixed ex ante to one or several other cost categories. In our case, we have the simplified cost option with the paired with the staff costs, where it amounts to 20% of the total eligible amount of real cost categories. We have office and administration costs, which were there before, but now also they amount to 15% of staff costs, regardless of the type of the option you use. And also we have a travel accommodation which amounts to 5% of staff costs, and it will be we think it will be a big deburdening of the project partners to report these costs in the future. So when it comes to the staff costs, Nelida already said a big part of this, of the content of this slide, so I don't want to actually repeat her or myself later. So I will try just to be very focused on what is the most important. As I said just on the slide before, it's 20% of the total eligible amount declared by project partners under external expertise, equipment, and infrastructure and construction works. What is also important for you to know that it's not allowed for project partners to use this option if they foresee inside of their budgets the cost of works contracts or supply or service contract which exceed in value the thresholds of the EU public procurement directives. In the presentation, you have a link to the directive I just mentioned, so I would propose you to check it so I don't actually now go and try to inform you on what are the real figures at this moment. When it comes to reporting, it's important to say that audit trail doesn't exist in case beneficiary or project partners is using a flat rate of any kind. That means that you are not required by the FLC auditor to check during the initiation, to check during the implementation of the project any document. What will be checked is at the initiation phase, the methodology used to calculate the flat rate of 20% for the staff cost. I made a small simulation of this calculation. I don't want to read out everything what is there, but basically I used the methodology to prepare the budget based on the work packages, which is how a monitoring system of EUI works at this moment. You can see that you take three cost categories which are calculated on the real cost basis, and basically use the flat rate of 20% on that total amount. There is another simplified cost option type which we use, and this is a standard scale of unit cost, which means that the initiative actually proposes to use a unique hourly rate to the staff, which will be related to the project implementation, regardless of the position of the staff working. The project partner must apply the unit to the number of the total employees they will be including into the project, and they have to also count that the maximum number of hours of an employee cannot exceed 1,720 hours per full-time employee. I prepared for you also the calculation, basically the formula. You can see how hourly rate can be calculated. So we count that you will be able to propose us based on how you count with your staff inside of your organization or certain department. So the full mass of annual payroll divided by the full-time equivalent, so number of persons working or related to the project in any way, so being paid by the project, and divided by 1,720 hours, which is a maximum per year. When it comes to the audit trail, it's important to say that supporting documentation to be provided by project partners needs to be ready by the initiation phase. And there you will actually get also the help of first level control to ensure that your methodology of calculating, which you used during the phase of planning of the project, is actually solid and can be used for reimbursement of your costs. So employment information will be necessary. You will have to provide the contract or equivalent document together with the financial claims. As Nelida before said, the financial claims 1, 2, and the final payment, which is a lump sum based. So you don't have to provide anything. I made a simulation again using this option. You can see an example made for one work package where the person, 2.5 persons of full equivalent persons will be engaged for 36 months. So basically what I did is got the hourly rate, which you can see is 29.7. I transformed the months into the years, divided it with, or actually multiplied it with 1,720 and 2.5 full-time persons employed. And I got the amount for the work package 1. In continuation, you are requested to do this for all the work packages, in which you can have various combinations of number of persons employed during the project lifetime, and for different durations. So you can see how you actually, that this cost is not related to any of the previous costs, but it's actually calculated based on methodology which fits the needs of your organization. So when we talk about what is considered to be eligible, we need to say that salary payments and all the cost-related contributions, employment taxes, social security, everything related, all the obligations of employer towards the employee are considered to be eligible costs, and evidence will have to be provided to the first-level control auditors. Just to make sure that something doesn't slip or we don't cover the ineligible part of the cost, so any voluntarily payments which are not matching the calculation of accounting service cannot be considered eligible. Staff costs for employees who are not officially assigned to the project with a special annex, work order, or in the contract cannot be considered eligible. In this moment, dividends as something which we face in the one employee companies are not considered eligible. Overheads are considered to be already counted in the office and administration cost category. And agency workers also, it's very important to say that if you are trying to include into your among your workers on your project, the people who you will be engaging through the agency. You have to plan it under the external expertise and services budget category. So now we covered all the simplified cost options. I hope they seem attractive to you and that you will be happy to use them, since they really mean a lot of administrative and reporting deburdening. When it comes to the rest of the costs, we still remained tracking them on the real cost basis. So in principle, the amounts which are planned by project partners to purchase different goods, services, or to build something as infrastructural works, and these are still 3 budget cost categories: external expertise and services, equipment, and infrastructure and construction works. So what is important to know is that these expenses have to be planned and incurred in basis of the real cost, will be a subject of procurement rules. When we talk about the procurement rules, you know we have EU level, national, and institutional level procurement rules, and the most strict actually prevails. What is important to say also in this part, and Nelida also pointed it out in her part of the presentation, that expenses based on invoicing between partners are considered ineligible. And when it comes to the audit trail, the complete audit trail will be followed. So a first level control will ask you for evidence of procurement, contracting, invoicing, and proof of payments to the providers of services, goods, or works. When it comes to so now we will try to actually break down this real cost on the basis of the type of the real cost we have available in our budget. So external expertise and services, in principle, these are usually professional services and expertise for which the project partner doesn't have the resources to cover, so they have to be purchased on the market. As you can see, there is a non-exhaustive list of examples we face on a daily basis by our projects. So these are usually studies, concept notes, designs, trainings, promotion-related costs, communication, IT systems, websites, etc. What is important to know is that these kind of costs have to be necessary for project and should be linked to activities foreseen in the application form. So this is why I said before that budget actually has to be the last stage in planning of your project for the second call of innovative actions. When it comes to the external expertise and services, we have something which we call financial schemes, and it's implemented by the project partners to the benefit of the third party. Basically, when you give a certain monetary or in-kind value to the third party who is not officially project partner. So as I said right now, so it's distribution of financial contribution to third parties. Most commonly, this comes in the form of prizes, vouchers, or grants. What needs to be ensured as a principle is transparency and equal treatment, which means that in your application form, you will have to explain in detail how your competition procedure will run, how whom you are going to award or reject, and how you are going to monitor and control the system of third-party grants you actually gave up. When it comes to limits, usually we get the question on what is the maximum amount we can give to the third party. So it's up to 60,000 euros is actually per third party is the maximum you can give. It has to be connected to the work package, activity, deliverable, or the output, and described as such in the application form. There is no maximum limit on the total financial scheme you want to carry out, but it has to, again, fit your innovative solutions. There are two types of financial schemes. I will just very briefly try to say what is the point. In one of them, the project partner actually doesn't doesn't communicate or give the award to the third party, but it's invoicing an outsourced provider who is actually delivering goods and services which are which are in the scheme describe how they will be provided to the third party. And only thing the third party does when communicating to project partner is actually giving the proof of reception of services or goods which were promised in the scheme. The second part is actually such where project partner is not connected to the provider, but he gives the certain grant or certain award to the third party, where he transfers the grant in euros, and the third party actually goes on the market and procures from the provider the goods and services which were promised and which were actually described in the application form. So among the real costs, we also have the equipment. So sometimes we are missing certain capacities, human capacities in terms of knowledge, and then we go to the market and procure services, external expertise. But sometimes we also miss a very tangible equipment, very tangible goods, which will help us to provide, to actually implement our project. So in principle, equipment has to be purchased, rented, leased, or in possession by a project partner to carry out a foreseen project activity or more project activities. Has to be covered. And the important thing is also that certain type of equipment is already possible to cover under office administration, and you should avoid to try to cover them twice in your project budget. So be careful of that. So what types of equipment we have? So the initiative actually breaks down the type of equipment to two basic categories. One is accessory equipment, which are tools and devices used to carry out project activities, and they are basically you will be able to report on depreciation of the value of this kind of equipment. While we have at the same time investment equipment, which are tools and devices or goods considered as project investment and also as a project result at the end of the project implementation. And with this kind of investment equipment, you will have to report, you can report the full cost and be reimbursed for the full cost. What you have to be aware of that here, ownership and durability principles apply. I will a bit later explain what this is. When it comes to the audit trail, the full audit trail, since this is a real cost basis cost planned, the full audit trail will be requested at the time of submission of financial verification of your financial claims by the first level control colleagues. The third type of real cost is infrastructure and construction works. As I mentioned before, there are different cases. In this one, with a big budget, as Innovative Actions actually provide 5 million euros of ERDF, usually the projects are able to involve infrastructure and construction works into their project. And in the principle, this kind of costs are eligible. If they don't fall in the scope of any other cost category, if they are crucial for the achievement of the project outputs, results, and later objectives, the full purchase price is eligible, so depreciation during the project implementation will not be considered. And also, as I mentioned before, ownership and durability principles have to apply. When we are talking about what this could be, as we saw your structure among our participants, you would already have the idea, but these are purchase and provision of land. As Nelida says, maximum 10% of the total project budget value. Purchase and provision of real estate, site preparation, renovation, building permits, building materials. As you can see here, there are also included some services which can be included into infrastructure and construction works. When it comes to the audit trail, again, since it's a real cost, this will be backed by the complete audit trail, so full documentation related to the public procurement related to the infrastructure and construction works. Now we come to the to the part which actually you have many pages in our guidance to read about. And it was a very kind offer from our colleague Nelida to actually point out the articles related to the certain financial rules. As this one, for example, we have investments, ownership and durability principles. We mentioned it a couple of times. So if you purchase something inside of your project, you have to make sure that it's sustainable, that it's used sustainably throughout and after project implementation, and you have to ensure that it's maintained properly. All investments in infrastructure and equipment, which are co-financed by the ERDF inside of your project, have to ensure that this principle is met. Ownership and durability conditions must be presented in the application form, so you have to actually describe already before you are awarded the ERDF how you are going to meet this principle. So we can break them down to ownership and durability. Only project partners can become the owners of project investments, and only those project partners who are owners of the investments or other partners inside of the project have to remain the owners for at least 5 years following the final payment to the main urban authority. Durability, when we talk about the durability, project investments must remain operational, which means that the nature of their use by the target groups cannot change at least 5 years after the following or after the final payment to the main urban authority. So now let's say the funny part is a public procurement, which basically is a set of rules which you have to follow when trying to actually in certain way realize your costs. What we know by the principle, and you can check it in the guidance also because there is a big section on the public procurement, each partner must be aware and must obey the applicable public procurement rules. No matter on what level they are. The obligation to follow the public procurement must be also well documented. The first level control colleagues will ask, auditors will ask for this, for the audit trail, so make sure that you are documenting and archiving properly your public procurements. Sometimes it happens that even the procurement contracts which are pre-existing, so you have some regular public procurement in your institution, have to be also, the audit trail has to be provided, even if they incurred basically before the project start date. Also, it's very important to say that even when their direct contracting is allowed, so with certain types of beneficiaries of project partners, like associations, like small businesses who are not obliged to follow public procurement rules, we have a set of conditions which they have to meet in order to prove that their procurement was done in a proper way to the first level control. This is where the market research actually comes in. So project partners who do not fulfill this obligation to do the public procurement, so are not obliged to run the public procurements for their purchases. For the initiative, any contract higher than 10,000 euros, excluding VAT, has to provide the full audit trail and documentation of how the market research was done in order to contract certain service or good or infrastructure and works. It has to be ensured that the research, so minimum 3 offers were received prior to the selection of the service provider. When it comes to the in-house contract, there is also, in certain institutions, there is a separate institution, and the project partner institution basically is obliged or has already established a partnership in a way that they procure certain goods and services from them directly. And I have to just say that please check the guidance for the 3 very strict conditions which have to be fulfilled in order for this kind of costs when planned to be considered eligible. It's limited to 50% of the budget of the concerned project partners. That's also one of the limits which you have to follow if this is a case in your organization. So as Nelida said before, so I don't want to also I don't want to repeat her too much. So 80% of the total project budget is actually provided by European Urban Authority as 80% of ERDF funding, but there is a 20% which a partnership actually has to provide from their own sources. This can be a monetary value. This can be simply a financial value you have on your bank accounts, but it can also be a non-cash contribution. So it can be in kind, and it can have a monetary value, but it has to be given. It can be given for free or free of charge to the project. So it can be certain goods, real estate, land, as before Nelida mentioned, unpaid voluntary work, equipment, services, rents, and this all can be actually expressed as in-kind contribution of the project partners. It's limited to the maximum of 20%, as I just said. And what is required from the project partners, it's necessary to carry out the project and achieve the project objectives, as with all costs which are deemed to be eligible. It shouldn't come from the other EU funds, so other EU sources. Its value has to be independently assessed by an expert. There is sometimes a possibility to engage your accounting service inside of your institution, but mostly we receive the value independently assessed by the expert. If you want to make this kind of in-kind contribution eligible, it has to be included in the application form. As it says on the slide, it has to be in the contribution section and also has to be planned inside of the work plan budget. What is important to say, so where do you actually fit this kind of contribution? It has to be allocated basically under the external expertise and service, equipment or infrastructure and work cost categories, meaning that you have to actually be able to put it under one of the real cost basis cost categories. There is one also very attractive, very popular question. Usually it's a state aid. So basically what it is about, what the state aid rule actually talks about. So the European Union is a common market, and basically this rule ensures that the EU funds, that the funds actually coming from the public sources are not disturbing the regular competition on the market of the goods and services inside of the European Union, meaning between two EU member states. So there are 5 conditions for state aid recognition. So you can try to recognize this kind of situations even before, during the project planning. It has to be concern the economic activity of project partners. It has to be concern selectivity, so the project partners are usually selected not on a very objective basis. It has to concern the public resources. It has to give the advantage to the project partner and has an effect on the competition and trade on the national, at least national scale. So EUI innovative action projects must be designed in compliance with the state aid rules and at all levels. So each of the project partners for themselves has to flag this to the main urban authority, and main urban authority has to revise the possible problematic situations and those and those project partners who would fall under the state aid rule. So ERDF budget of 80% is by default immune from the state aid risk, so you're never concerned of the 80% given by the EUI. What you have to focus on is the 20% of public contribution, so it has to come from the public sources. It has to be it has to involve the economic activity of these project partners, for which 20% of public sources is planned. In state aid risk, if in case you ran into the state aid risk, there are also, inside of our guidance, there are 5 conditions. All the 5 conditions are met, and the partners can explore the options which they have to report this kind of situation or to get the feedback from the authorities which concern these issues. Well, thank you very much. I think we have a slide of questions, so I will just ask my colleagues to continue.
Thanks, Rinka, to make it really more interactive, this part of the presentation, because it's too many rules about eligibility of expenses. We have different quiz questions. We need your participation into our Slido, please. So, Maya, could you help us with those quiz questions we have for our audience?
Thank you, Nalida. Thank you, Zrinka. We have 2 quiz questions for our audience, so please do get on the Slido. Our first quiz question is about the standard scale of unit costs. The question is the standard scale of unit costs hourly rate for project partners calculated automatically by the EEP system for project partners selecting this option? So to repeat the question, is the standard scale of unit cost hourly rate for project partners calculated automatically by the EEP system for project partners selecting this option? And we've started to get some answers through from our audience, so thank you very much. Quite a strong position here, although now it seems to be evening, so I think I will now hand over to Zrinka for the right answer.
Yes, I would say most of you are actually right. So as I explained during my presentation, the standard scale of unit cost is offered as a formula by the permanent secretariat, but the hourly rate itself has to be calculated and provided by the project partner who wants to use this, this option.
Wonderful. Thank you, Zrinka, for answering that question for us. Moving on to our second quiz question. Is the amount awarded to a third party via a financial scheme considered as a lump sum, and thus no audit trail must be provided to the first level controller? So to repeat the question again, is the amount awarded to a third party via a financial scheme considered as a lump sum, and thus no audit trail must be provided to the first level controller? So we've just received our answers. Again, a strong message here. Zrinka, I think we're ready to hand over to you for the answer.
Yes, thank you. The right answer is, of course, no. As I said during my presentation, again, financial schemes are actually planned as external expertise and service type of costs. So basically, it's important to know that they will be assessed as a real cost, meaning that a full set of documentation related to the audit trail will have to be provided to the first level control.
Thank you, Zrinka. Now we will take 2 audience questions. Please, Maya.
Thank you. Yes, we are now moving on to our audience questions. Please keep them coming. If we haven't got your question with us now, we will have 30 minutes at the end of the session. So our first audience question is, as MUA, Main Urban Authority, our staff counts more than 6,000 employees, some working on tasks not at all related to the project topic. Do we need to include all of them into the equation for our hourly rate? Zrinka, have you got the answer for us?
Yes, the answer actually depends on how your organization or institution works, meaning that we are strongly enforcing the project partners to work with the methodology we provide to them and to assess if it makes sense to calculate, to take into consideration the full mass of salaries of the whole organization, or in case of the bigger organization as such, only a department or unit. Thank you, Maya.
Thank you for your answers, Zrinka. We're now ready to move on to our second audience question. Are there any regulations regarding the ownership of equipment or investment after the project closure? So that's, are there any regulations regarding the ownership of equipment or investment after the project closure? Over to you, Zrinka.
Thank you, Maya. As I said, again, during my presentation, there is an ownership and durability principle all the project partners have to follow in case they are becoming an owners of equipment or certain infrastructural items. what is important to know that at least for 5 years after the project, after the final payment to the main urban authority, project partners have to be remain actually owners of the investments.
Thank you, colleagues. Now we will move to the last presentation, which is building your project budget for after the video transition. So, when planning your project budget, just put you the right slide. So, okay, when planning your project budget, we need to consider your work plan activities. We need to consider the who will do what and for how long. Then we need to consider the resources that we need to deliver this work plan. It can be people, it can be equipment, materials, land, etc. So we need to give them a monetary value, which is giving them a cost to our needs, for which we will need to check the actual prices in the market for the salary cost, for the services, for the expertise, for the type of equipment we need, for the materials, etc. And finally, we will have to do the allocation exercise as it is presented in the graph. Allocation to the different project partners, allocation to the different work packages, allocation to the period of time even. Without forgetting that we have to put special consideration to 3 aspects. The co-financing rate, like the initiative will reimburse you up to 80% of the project total cost, and you will have to complete or bring the other 20% contribution at the partner level and at the project level. Then you have to plan your costs that are essential to the project implementation and relevant to the activities that you are planning in your different work packages, in the activities, in the deliverables, outputs, investments. And finally, you will use the bottom-up approach, which is the total project budget will be the sum of all the partner budgets, of all the cost categories per project partner, and then what we can do, at the end of this presentation is an example on how to calculate a project budget. So now let's go through the key principles of sound budget planning. I'm really basing my presentation on the ERDF sound financial management principles and value for money principles. So first of all, your projects or your costs need to be eligible in different levels, eligible at the European level, eligible following our guidances, eligible following the rules of the partners organizations, eligible at national level. So then the question would be, then if we do have different rules and some of them they do contradict, or which one do we decide to follow? Then as we said in our guidance, you have to follow the strictest rule. Then your budget needs to be relevant. Your costs should directly and clearly relate to the work plan and the activities that you propose in your application form. First, you need to plan your activities, and then you will have to plan your budget. We never, when we are doing the operational assessment, we never assess a budget on its own. You have to always ask yourself this question: does my budget fit the activities that I propose in my work packages? Then your budget needs to be realistic, proportionate, and reasonable. You need to take into account the value for money principles of economy, efficiency, and effectiveness, and the budget distribution that should be proportionate to the involvement of the project partner and should be reasonable as well in the distribution of time. So, but what does economy principle mean? It means that you have to minimize the cost of your resources when doing your budgeting and when implementing your project. Then the principle of efficiency is that you have to get the most from the available resources that you have. And effectiveness means that you have to meet the objectives and achieving the intended results of your project. Your budget as well needs to be transparent. For this, you are requested to provide detailed information of the budget planned. Now let's get to see some examples regarding these key principles of some budget planning. Here we have a thematic work package 5 for an X project. The work package 5 is about rethinking and reviving the building. So I will just focus on one activity of this work package 5. This exercise that I will be doing should be done with the other activities as well. So focusing on activity 5.2, named Testing Different Energy Efficiency and Climate Proofing Solutions. The corresponding deliverables or intermediary steps of this activity would be deliverable 5.2.1. First, I need my building assessment to identify the sustainability problems that I have in the building. Then the next step will be designing the state of the art of the solutions addressing the challenges identified before. Then to deliver the technical renovation plan for the building. This will be my last deliverable. And in consequence, the final products I will have for this activity or under this thematic work package would be my outputs and investments. As output, I will have the building enabled for hosting the social services. And as investment, I will have the testing and installation of sustainability solutions, intelligent services, climate proofing, energy efficiency in the building. So for an partner number 3, which is going to be taking the lead role for this activity, ABC organization, let's say is the name, I opted for a staff cost, 20% flat rate, calculated based on external expertise, services, equipment, and infrastructure and works cost categories. Even if this is flat rate, as you can see in the table in gray color, I still describe my staff cost by putting the number of full-time employees, the period of time that this person or employees will be dedicated to this project. So please try to follow the same example when you are going to plan your budget. We like to see this level of detail when we are assessing the budget of an application form. So I as well enter different other details in the other budget lines or cost categories, external expertise, equipment, and infrastructure. You will get to see that in the green circles, there is even this link to the numbering of the deliverables or the outputs or the related investment without leaving just, I don't want a list of numbering only the deliverables. It's as well giving the context of this, providing a short description of this part, so to whomever will read your application form. It can be an auditor, it can be an assessor, or whomever, to sort of understand without necessarily going back to the other level of details. By reading these details, we should be able to understand, and we should be able to make the links and logic and follow that your budget has a logic regarding the planned activities that you proposed before in the content area. So let's go to the next slide, which is examples of the principles of proportionate and reasonable budget. So your budget needs to be distributed in line with the partner's involvement or the specific time frame on which the delivery will be happening. If one partner is responsible for a certain work package, it is important that this is also reflected in the budget. Any high or low budget share must be relevant and proportionate regarding the work plan activities distribution. You will see that this slide resumes these two principles of reasonability and proportionate budget. Then, how do we use our template, the application form? To enter the budgets in each work package, you need to make sure to enter the right partners at the partner involvement section. So right below the title of the thematic work package, you will have partners involvement section, where you will have to list the responsible partner for the work package. And then you have below the involvement partners. Again, you mentioned the responsible partner and the involved partners that will take an active role in delivering this work package or the different activities under this thematic work package. Why? Because only by doing this, you will activate the following budget breakdown table at the end of your work package, which is like for the listed partners, as partner 1, 2, and 3 were listed before, as you can see. Then you will generate the budget breakdown tables for those. And then you have here to 200 characters that limit your cost description. You will need to allocate the cost according to the right nature of those to the different cost categories. You will have, for this, you have this courtesy document in Word document that we created for you as part of the pack of documents for your application. You as well have an online tool which is called Info Bubbles in the system, where we provide you more guidance and details and examples of this, what you are requested to put in those sections. And then last advice from our side would be that you review the formulas, that these are calculating correctly the amounts. Should there be any kind of bug or error, let us know immediately, please, so we can immediately react on this. And by the next slide is what we promised you before. It's the time for building your project budget together. So we have, as context of this exercise, that we have a project with a total budget of 6.25 million euro, tech total eligible cost. Then we have one main urban authority and 4 delivery partners, then 3 transfer partners, and the considerations for this exercise would be that my budget will be built per partner organization, per cost category, and that this project has an investment element, that for the first cost category, I am opting for a standard scale of unit cost equal hourly rate, and that we have 2 types of equipment, accessory and investment equipment, and that I also have a real estate presence in the form of in-kind contribution for the last 6 cost category. So let's calculate the staff cost for this main urban authority. Let's start by doing the exercise for the first main urban authority or the first project partner. Using the standard scale of unit cost options, we have a formula. This is the formula that already Shrinka explained. We have a hourly rate per partner organization multiplied by 1,720 hours, multiplied by full-time employee percentage or part-time employee percentage, or the percentage dedicated to the project, plus the multiplication made by the number of years. We will show you the calculation steps in 3 different positions. One for a project manager, dedicated full % to the project for a period of 3.5 years, then for a finance manager, and then for an architect working for the main urban authority of this project. This is a hypothetical case only. So let's calculate the staff cost for the project manager. The partner hourly rate is 29.07. Where I'm taking this calculation is from the example that Shrinka made previously in the hourly rate. So I'm just using this calculation that she made. If you want to go back to the slides and see how she reached to this number, so you can see it in the presentation later on. This I multiply by the 1,720 hours by, this is full-time employee by number 1, multiplied by 3.5 years dedicated time to the project. The amount that I obtain is 175,001 euro.4 total eligible cost. Now, I invite you to make your calculation for the finance manager, taking into consideration that this finance manager is only dedicating 60% of his time to the project and will be working for 3.5 years. So please, if you can just follow the same formula that we have above and calculate yourself. So, and you should have obtained the following amount, which is 105,000.84 euro tech, total eligible cost. And now we will calculate the cost for the architect who has a part-time contract with 50% of dedication to the project. And out of this, only 40% will be working for the project for only 2 years of implementation. So please, if you get to calculate following the same formulas put above. So your result should be 20,000 euro, 0.16 euro tech for the architect. We will round off these costs as our EEP system does not work with decimals. So summing up this cost, we will have as budget to be allocated for staff cost or the first cost category, totaling to 300,000 €2 tech total eligible cost for the main urban authority. Okay. Just before going to this, one message regarding hourly rate. Remember, if you go for hourly rate, that each partner organization calculates its own hourly rate, and then the first level controller will verify this calculation, that this is rightly made during the ex ante control that happens in the initiation phase, if in case your project is selected. Now let's go for the second cost category, which is let's calculate the office and administration, and then the third cost category, travel and accommodation, because these are easy ones. They are only flat rates applicable to the staff cost, to the first cost category. So for office and administration, knowing that we have for staff cost category budget 300,000 €2 tech, we will apply a flat rate of 15% to a staff cost for office and administration, and a flat rate of 5% of staff cost, obtaining the following amounts. For office and administration, I will have 45,000 euro tech, and for travel and accommodation, 15,000 euro tech, total eligible cost again. So our budget so far is we follow the cost category 1, cost category 2, cost category 3, adding them would be 360,000 €2 tech. So let's move to the next cost categories, which are based on real cost. These are external expertise, cost category 4, cost category 5, equipment, and cost category 6, infrastructure and works. Those are real cost based. And for the application form, what you have to remember is to estimate this cost as realistically as possible using the different principles that I explained before, sound financial management, value for money, economy, efficiency, effectiveness, and making your research in the market as well for those costs. And make sure as well that for this real cost-based, you have to provide a complete audit trail or documentation or justification of these cost categories to the auditors. Let's start by the external expertise and services. Under this cost category, we could list different costs that could go, for example, travel of external experts that should be only allocated here. By 5,000 euro tech. Then we have legal consultancy, life psychoanalysis and studies for 35,000 euro tech. Then we have architectural and technical design plans for 25,000 euro tech, and promotional campaign for 35,000 euro tech. Then maybe I am under main urban authority budget, I will have to think about financial schemes maybe, valued at 120,000 euro tech, of course following all the conditions that Srinka explained before. Plus, we have to remember that because we are calculating the budget for the main urban authority, we have two lump sums to add. The preparation and initiation phase lump sum equivalent to 100,000 euro tech, and the closure lump sum equivalent to 20,000 euro tech. Only for this case, because main urban authority is the only one recipient of the lump sums. The other partners should not even consider these lump sums in their budget portfolio. So this makes a total for external expertise and services real cost base, 340,000 euro tech. So our budget so far will be 700,000 €2 tech. Let's move to the fifth cost category, which is equipment. Under this category, you can decide whether you will need to go full cost, whether you will apply the depreciation, or go for renting or leasing of the needed equipment and materials for the implementation of the project. But always you have to, again, for a real cost-based cost categories, remember the value for money principles as explained before. I will explain this. For the project example, we consider 6 laptops for 12,000 euro tech that will be used for the whole project implementation. These are linked to the project investment. Therefore, the full cost of the laptops are considered, and they are allowed. Then we have screens, display, and visualization tools for the IGNO lab for this building. I'm following the same example of the building that we made before. For 80,000 euro tech, linked to the investment, again, therefore making my cost fully to be considered or eligible. Then I will have to consider the batteries to store the energy full as well, because this is linked to the investment and the output of the project. And this for a total value of 60,000 euro tech, total eligible cost. And this is what I mean by value for money principles distinction. I will have 3 electrical vehicles for promotional campaign, but my campaign will only last 1 year. Therefore, I just need to rent these 3 vehicles for 1 year. I cannot go and purchase the 3 vehicles and put it as part of my project budget because, again, it will only be used for a year, and it's only supporting the implementation and the delivery of my activity. Is not the key, it's not the heart of my innovation, it's not linked to the investment. Therefore, I just go for the, leasing or renting or any other type of cost, but not really the full cost of it. So this is equivalent to 25,000 euro tech. And summing up all these costs, we will have 177,000 euro tech for equipment. So considering and adding to the previous budget, we have a total of 877 euros tech. So let's go and move to the last cost category, infrastructure and works and construction works. For this, taking into account the previous calculation that we made, we will, for this cost category, think on all the elements linked to the investment. Whenever I talk about cost category 6, it's because it is immediately linked to the investment notion. So therefore, the prices of the cost that I will plan under this cost category are fully eligible. And there are 2 obligations that you have to keep in mind here. Is the ownership, as mentioned by Srinka before, and the durability aspect. The ownership, again, only project partners can be owners of the investments, and the either infrastructure and building investment or real estate or equipment investment. And the durability, which is the investment, should remain operational and continue to serve the purpose of a certain period. For our example, we have the provision of real estate in the type of in-kind contribution for 200,000 euro tech. To this, we will add adaptation and renovation works to the basement, the 2nd floor, and the rooftop of my community center, or the building that we identified before, for a total value of 150,000 euro tech. This will sum up to a total of 350,000 euro tech, again, based on real cost. Again, the notion of full, complete audit trail to be provided to auditors. And our total budget, summing up all the different cost categories up to now, would be 1 million for main urban authority, would be 1,227,002 euro tech. So let's calculate our total project budget. Our total project budget would be the sum of the project budgets for all the different partners. As we did the exercise for the main urban authority, I'm considering this 1 million there that we just said. I will add the 3 delivery partners, or the 4 delivery partners, sorry. Partner 2, partner 3, partner 4. Let's imagine that I calculated this following the same exercise that I just did for main urban authority. And then I will add the transfer partners, lump sums, 3 lump sums equivalent to 150,000 euro tech. So, and this should give me the total project budget. In this case, I'm going with an example that goes to the maximum of ERDF that a project can receive, 5 million euro ERDF, with a contribution to be added equivalent to the 20% of the total, which will be 1,250,000 euro for contribution, totaling to the 6,250,000 euro tick. So I hope with that it was kind of clear. Now I think it's moment for a quiz question, Maya. So let's check if our audience is still there, paying attention to what we are saying.
It is time for a quiz audience question. And our audience question is, what are the sound budget planning principles to consider when building your project budget? So to repeat the question, what are the sound budget planning principles to consider when building your project budget? Feel free to describe in a few words after listening to Nelida's presentation on how to plan your budget and the budget planning principles which she mentioned at the beginning of her presentation. We have some participants writing. So what are the sound budget planning principles? We have our first answer, efficiency, value for money, fantastic. Keep your answers coming. You will be doing this soon for your proposals, so it's really important to consider what the budget planning principles are. Fantastic, we're getting a lot more answers. Accuracy, transparency, effectiveness. Thank you very much. Nelida, I think I'm going to hand over to you. What do you think about our audience answers?
Thank you very much, Maya. I'm really happy. That means that you really pay attention to what we were saying before. All of the answers that you are just writing there, and I keep looking at those, are correct. Value for money, efficiency, realistic, reasonable budget, proportionate, durability as well, aspects to consider, transparent budget, et cetera, et cetera. So thank you very much for those answers. Now let's move to the last slide that I have for this part of the presentation, which is about summing up some project budget tips for you when writing your application form. Please try to rely as much as possible to our guidances to plan your budget, to what is possible, what is eligible, what is not. Then be as realistic as possible when planning your budget. Use the principles of good value for money, plus the sound financial management principles, not only for the design, but as well for the implementation phase if you are the lucky one to be selected by our initiative, and then as well, same for post-audit stage. And use the principles as well, of this reasonability, proportionate, and relevant budget, which is like you really need to reflect your partner's involvement in the activities, in the content area when you are going to write your activities, deliverables, outputs, etc., but as well in the budget whenever you write the description of your costs. Do not include costs that are already covered by the initiative. Indeed, our initiative covers two types of costs for your project implementation. The cost of the auditors equal first-level controllers, and the cost of the experts. In the past, we used to call them Urban Innovative Actions Expert. Now they will be called Innovative Actions Expert. This expert will be the critical eyes friend that you will have to support you during the implementation, but rather to capture the knowledge and disseminate this to the other European audience or urban practitioners interested or other cities interested on your solution. Then use a tool outside the EEP system to plan your costs, to build your budget. Example can be a basic Excel or any other type of system that you can have at the municipality level or the organization level. And be aware that budgeting takes time, so please start early enough. Of course, and only after you have drafted your work plan and the content of your work packages. So, thank you very much. Now I think it's time for a video transition to move to the next session, which is the awaited question and answer part, live part. Thank you very much. Okay. Thank you all for your participation today and answers to the different quiz questions that we had, and the audience questions as well that either me or Srinka, we were trying to respond. Of course, there were many other questions arriving to our Slido, via Slido, so it's the time to give an answer to all of those. So for the next 30 minutes, we will take all these questions related to the three presentations that were given today. Funding principles, eligibility of project expenses, and budget planning or budget building. Maya, could you share those questions with us so we can give an answer to them?
Thank you very much, Nelida. Thank you to the audience for sending through your questions. Our first question that we've received from the audience today focuses on the budget share. And the question is, does the main urban authority need to receive the major part of the project budget? So to repeat the question, does the main urban authority need to receive the major part of the project budget? Over to you, Nelida and Zrinka.
Thank you, Maya. Yeah, I will base my answer on the past programming period. The different application forms we receive, like just making a trend out of the applications we receive. These answers really depends on the nature of your solution. Main urban authority has to be the owner of the project because we are created as initiative for them to test new solutions, urban solutions, innovative solutions. They have to be as well the lead ones in the project management and the financial management of your project. They will be the ones signing the subsidy contract with us. And therefore, it's important that they do take this ownership of the project. Nevertheless, if the solution remains in one of the project partners, like any technical body, institution, research body, depending on really the solution that you are proposing, there is nothing that prevents the allocation of budget to another project partner. The minimum necessary, what we saw in the past, is the minimum of 10% dedicated of the total project budget to the main urban authority, but this has to be duly justified. We need to see that the budget is really proportionate, allocated in a reasonable and relevant manner, depending on the content and the delivery that the other project partners are doing for the implementation of the project. We will all the time check this, or not only read the theory part C of your solution, but as well the work plan, the application form, where you will sort of detail in the different activities, work packages, deliverables, outputs, and investments, and we will get to see, this project partner is leading our work package. This project partner is as well being involved heavily in another work package, and therefore is receiving this amount of X budget. X% of budget. But if we get to see, for example, that a work package is led by a project partner and this project partner only has 5% in that thematic work package of the budget, so then we will get to wonder, this is nonsense. I mean, it is not coherent to what you are writing in the content, the involvement, the delivery, and the responsibility of this project partner when doing the implementation of your project. So really, it's up to you, but duly justified cases. Maya.
Thank you very much for your answer, Nelida. Moving on to our second audience question, which is about the preparation costs, so the lump sums. Can you explain to us the conditions of reimbursement of the preparation costs in an EUI project? So can you explain to us the conditions of the reimbursement of the preparation costs? Over to you, Nelida and Zrinka.
I think I can maybe answer best this question. So when it comes to the preparation costs, as you know, eligibility of this cost actually depends on if your project is firstly selected for funding. So, and if the project is selected for funding and went through the initiation phase in a way that this cost, that the project is allowed to continue to the implementation, the preparation costs will be paid with the first advance payment of the project. So the full project budget, including preparation and initiation phase lump sums, will be included in the first advance payment, which amount to the 50% of the total project budget.
Thank you very much for your clear answers, Rinka. The next audience question is about eligibility of costs. And our question is, are prizes to participants eligible? If so, under which cost category? Are prizes to participants eligible? And if so, under which cost category? Over to you two.
I can take over the question. This, in the first glance, it seems like it actually is connected to the financial scheme. When we talk about the participants, we have to know what is the scheme is about, participants of what these persons are, and what will be actually the whole procedure of selecting or allowing them to receive this award. So basically, I would say on the first glance, this is a potentially eligible cost which has to be planned under the external expertise budget as a financial scheme. But the whole procedure of how these awards will be given to the participants has to be described in detail. Thank you, Maya.
Wonderful. Thank you very much. And we've got a question here that we've seen in quite a few different formats, so quite a popular question now. And the question is, can you tell us more how the partners should secure their own contribution? So can you tell us more about how the partners should secure their own contribution? Over to you, Nilita and Srinka.
I will answer this one. There are many ways. I'll try to mention all of them. But, I mean, it depends to the creativity that the partnership has. So general rules or traditional way of doing would be that I got my 100% budget for my total, for my project, the total tech, as I called it in my presentations. 80% of it is going to be covered by ERDF funds, what the initiative will give you. And the 20% contribution is what you have to ensure at the project level, meaning the total level, or the partner level. Traditional way of doing this is that each project partner belonging to the partnership brings this 20% each of them, like whenever they are preparing their budget, partner one present with 80% to be received from funds, ERD funds, then 20%, this is the amount that is allocated, that is calculated by the system, to which I have to make sure that I contribute to the same amount, to the same figure. Partner two comes with 80% allocated to them. Let's say, I don't know the budget share, because this is really up to you how you have calculated based on the bottom-up approach that we mentioned. And this will be the 20% that you have to collaborate with, unlike this. This is the traditional way. But it happens that in some projects, the main urban authority can cover the 20% contribution. For one project partner, apart from the main urban authority, but also for another project partner, or for several project partners, or the entire partnership. That the municipality says, okay, I do have this, I have enough means to cover the contribution for the whole partnership, for the 7 partners that I am bringing on board. And the way that I will be covering will be with in-kind and cash contribution, for example. Or totally can be in cash as well. I mean, this is up to the partnership. And what the partners have to do in the application form is to mention in the section F of the application form, source of contribution, list the project partner. Like main urban authority will be covering the 20%, coming cash type. The same, partner 3 will mention main urban authority covering the 20% of this partner contribution, like this. Or it cannot only be the main urban authority, it can be other project partners willing to cover as well this. Or they can say the contribution will be covered in 2 ways, cash and in kind. It can happen that this is really centered around a big building and a land site. So they will value the land where the building is located, the real estate is located, and they will value the building. So making sure that these both elements mixed do not exceed the 20% contribution at project level, that this is respected, but another condition more to add, that the land, the provision of the land, is not exceeding the 10% of the total project budget. This is for land only. Real estate, we don't really care. on the limitations. And then they can mix this with other different, I mean, it can be provision of land limited to 10%, plus provision of in-kind in the form of unpaid voluntary work, in the form of services or rent that I will value, in the form of a donation of goods or equipment. It really depends. So these are manners to cover the contribution for a project.
Thank you, Nelida, for answering that popular question. We've got another question from the audience, a bit more related to support to applicants, but in the application phase regarding the budget. So the question is there any budget Excel template available? Over to you two for the answer.
I can try to answer to this question. For a moment, not. Unfortunately, not. What we have right now is our electronic exchange platform, in which you are actually required to enter a budget when is already planned. So we strongly recommend to use Excel's outside of the system to coordinate the planning and the filling in the budget by the partnership. So you as a main urban authority, or I'm just assuming it was a main urban authority asking this, but main urban authority is actually required to coordinate these tasks on their own, using Excel as a free tool, let's say a free tool. But for the moment, we don't have Excel provided by the initiative. We hope we can work on these tasks for the future if it appears to be necessary for our applicants. Thank you, Maya.
Thank you, Zrinka. Next question. It's a concrete example we've got here, but very much relates to the budget threshold. So, is it possible to exceed the 6.25 million euro of total eligible costs? Indeed, we plan a construction with a budget more than 6.25 million, and in our case, the partners would add an additional 6 million. So I'll repeat the question. Is it possible to exceed the 6.25 million euro of total eligible costs? Indeed, we plan a construction with a budget of more than 6.25 million, and in our case, the partners would add an additional 6 million euros. Over to you for the answers.
Thank you, Maya. I'll take this one. No, unfortunately, when we were presenting the application form and even in the funding principles, we said, and there was a quiz question related to that, which is the maximum budget or the limitation there. The maximum that you will receive from us is 5 million ERDF, total eligible cost 6.25 million. So this means in the application form, our system will limit you to enter to this level only. However, I do understand that your project comes, it's a pilot, maybe it's a pilot design into a big infrastructure project or a big investment that you have at the municipality level, etc. So this can happen. In the part C of the application form, you can always detail the storytelling part that we call for the application form, where your project is located, that your project belongs to, or it's going to be a pilot only out of a big infrastructure. You can mention this aspect, but again, in our template and in the part D of the application form, which is the work plan, you will compromise yourself to deliver something valued at maximum 5 million ERDF, totaling 6.25. So work plan, part D of the application form, has to only tell the story about what you will be doing with that 5 million ERDF. To us, to the Permanent Secretariat, to the assessors, to the auditors in case your project idea is selected. So because we will be checking your application form all the time, following it up for the implementation phase, and make sure that whatever you are delivering is really linked to the work plan that you present in the application form, but as well linked to the objectives that you identify in the part C, in the storytelling part of your application form.
Thank you very much, Nelida. We have another question about staff costs, particularly staff cost reporting. And the question is, do we need to deliver timesheets for staff costs? Over to you, Nelida and Zrinka, for the answer.
I can answer this question. So basically, if we talk about the staff cost calculated on the flat rate basis, meaning 20% of the real costs planned inside of the budget, timesheets are not required at all. So no kind of document is actually required in that case. When it comes to standard scale of unit costs, timesheets will also not be required because we consider that the engagement of the person, employee working on the project will be set in the documents such as contracts, addendums to the contract, work orders, and similar. And this will be, and actually following the process of progress of the project will be focused on, and not so much on the documentation and administration. And this is exactly what the simplified cost options are aiming at. Thank you, Maya.
Thank you, Zrinka, for your answer. We have about 10 minutes left of questions and answers, so please do keep your questions coming. Our next question is related to in-kind contributions with a specific example again, and the question is, if we act in part of a building, could this be considered as an in-kind contribution, and how should we calculate the value of this in-kind contribution? So the question is, if we act in part of a building, could this be considered as an in-kind contribution, and how should we calculate the value of this in-kind contribution? So over to you, Nelida and Zrinka, for the answer.
Okay, I'll try to take this one over. Maya, can you repeat the part that if this is only related to the real estate or the building, or is it the people participating and trying to value their work or their involvement as in-kind type?
No problem, I can speak to that. So the first part of the question says, if we act in part of a building, could this be considered as an in-kind contribution? So I think maybe providing two separate answers on the difference between whether there is a project partner working in the building or whether this is specifically a contribution. But it's if we act in part of a building. I hope that's okay. I'll hand back to you, Nelida.
I think this is more like the activity that they will be delivering as part of the project implementation. So project partner employees valuing their contribution to the project in the form of in-kind. Careful here. In-kind contribution is created for the different cost categories: external expertise and services, equipment, infrastructure and works, no for staff cost. However, we opened this in this new programming period the possibility to value unpaid voluntary work, which means, and this is something to be careful about, whatever unpaid or volunteers that you will sort of have this notion about, unpaid voluntary work, this should not be part of any paid assignments. There should not be this notion of cash payment, or they shouldn't be part of payment assignments to volunteers. They shouldn't be employees of the organization assigned to the project implementation. So we cannot have employees of a partner organization assigned to the project because the employees are already having this legal bind with the organization. Therefore, there is this staff notion already, and therefore it is this cash contribution, no in-kind. Then they shouldn't be covered by scholarship fees for if you want to value the in-kind of like PhD students or researchers working in the university, for example. So this is the idea, that as long as you keep these three control, that the unpaid voluntary work is not coming, it's not related to pay assignments to the volunteers, to employees working for an organization, or to scholarships fees, then you can value the unpaid voluntary work under external expertise, but no under staff cost category. So be careful there. I think that's what I mean. And yes, this is, I mean, if you are valuing this as unpaid voluntary work under external expertise or studies that you can make in the form of, I don't know, analysis or assessments, feasibility studies that your organization plans to provide us in kind, yes, this is welcome.
I would maybe add, if I'm allowed, to Nelida's answer, since the answer, actually the question was maybe formulated as if we can add maybe a part of the building as an in-kind contribution. So I understood it like this. So I would like just to reflect next to the whole volunteer work inclusion. So your part of firstly, the part of the building you want to add as an in-kind contribution has to be necessary for the project. So it has to be connected to the project activities, result to be achieved, outputs, outcomes, outputs, deliverables, and also at the end then contributing to the achievement of project objectives. If this is ensured, then your part of the building you want to include as an in-kind contribution has to be, the value has to be estimated or assessed by the independent external expert. So it's very hard to rely only on the value which you actually have in your accounting books. So we need to include independent expert to give the opinion on that. And in that case, if these two conditions are met, you can add a part of the building into the project budget as an in-kind contribution.
Mm-hmm. Thank you, Srinka. And with that, I think if we do this, I mean, there is going to be always this process of clarification or confirmation or validation that we didn't cover today in our presentations, which is related to audit part. So there is going to be this first level controller or the auditor that we will be paying for your project, that during the ex-ante control, if you are luckily selected to be part of our portfolio of projects, then they will be verifying this, all this stuff. Plus as well, during the in-kind contribution needs to be mentioned in the application form, in the section F of the application form, plus as well in the corresponding thematic work package or partner budget breakdown. Then when you feel like you need to submit the first financial claim, and then you need to report your in-kind contribution, then in that moment, your first level controller, the auditor that you will receive, will be controlling this certificate of the external expert, valuing and making sure, yes, this is the value for this real estate that you are putting as in-kind type. Maya.
Thank you very much. Well done for the teamwork on answering that question. The next question is related to the type of investments accepted with a specific example. So can the project include a school that is built with leasing financing? The application would only include the green roof and the yard and not the entire building. So the question is, can the project include a school that is built with leasing financing? The application would only include the green roof and the yard, not the entire building. Over to you two for the answer. The answer would be yes. Of course, everything depends when we are trying to tackle a very specific question. Everything depends on the conditions under which the innovative solution was developed and the objective sets and activity sets. But in short, yes, this would be an eligible situation.
When talking about real estate, it can be the whole building, it can be the whole premises, it can be part of it, the rooftop, a specific area, the whole. Really, it's really up to you on how to demonstrate that this is the area or the space that you need to deliver or implement your project or the solution that you are planning. And it has to be always backed up by what you are writing in your content area, Part C work plan.
Yes, only thing which I would maybe add is, since lease was also mentioned, make sure that the investment is in the ownership of the partnership. So make sure if the main urban authority is going to be investor, but the school is another legal entity, make sure that you include them into the partnership in a way so the ownership of over the project result actually stays among partners, project partners.
Mm-hmm. Or if we complicate more the thing, the example, this real estate is given as donation, as in kind, from external to the main urban authority or to the project partner. So we need to see this, that at the end there is going to be a certificate, a document telling that this donation, external donation, is coming to the hands of a project partner. Then from that moment the project partner is the one responding to us, an owner of this donation, this real estate, equipment, type of investment, or of any part of it. Thank you.
Thank you both for answering that question. We might have time for a couple more questions, so let's try to squeeze them in. Our next question is on travel and accommodation flat rates. And the question is, do all the project partners have the 5% travel flat rate, even if some of them will only travel from time to time or might not travel at all? So over to you for the answer.
Yes, I will answer this question. The answer is yes, in a very short. So the flat rate for travel and accommodation is the 5% calculated on the basis of the staff costs. So each project partner who is planning the staff costs, no matter which of the two options they choose, they will have automatic calculation of travel and accommodation in this 5%. And since they don't have to prove, they don't have to keep or provide any audit trail, meaning actually giving the evidence to the first level control that the travel actually happened. This is a very good option, I think, for project partners because it grants them a certain sum of money which they don't have to justify with the audit trail.
Just to complement on that reasoning why we included this travel and accommodation 5%, it was because this time we are entering heavily with this notion of transfer cities. So it can happen that the solution of the project, it remains not only in the main urban authority, but as well is a big delivery partner that brings the core of this innovation. And sometimes you will be needed to travel to the transfer cities to demonstrate part of your innovative solution or the whole innovative solution, or speak about it, or just transfer the knowledge that you are acquiring with this by testing, by exploring, by delivering this innovative solution, or on the contrary as well, receiving the visit of those transfer cities. But this is why, I mean, we all this time consider to have it standardized as well. Maya.
Thank you again for answering the questions. Our next question is about equipment, and I guess it might need some examples here as answers, but can you explain to us, and ideally give us an example of the difference between the so-called accessory equipment with depreciation and investment equipment?
Okay, if you don't mind, I can go quickly and then you compliment, Rinka. Okay, let's remember what we presented in the PowerPoint presentation. When I was highlighting the fact that laptops, screens, or display, or visualization tools, etc., are coming as full percent of eligible cost. Why? Because they were linked to investment, to the investment element of the application form of the project. So when the equipment is linked to the investment element, or the equipment is a final product made by the project, considered as the one responding or immediately attached to the objective and the result of the project. So this is investment type, let's say equipment of investment type. And the rest is accessory. Equipment accessory is just supporting the delivery of your project implementation. Like you are doing workshops for the local communities, you need maybe screens, laptops, I don't know, microphones, depending on what you need, or a campaign, promotional campaign. So then you need equipment for that. This is accessory equipment because you need those to support the implementation of your activities. And this accessory equipment will not go with the full price necessarily. You have to check the depreciation. The depreciation that will tell you, like, if an equipment, let's say, has the depreciation nature for 3.5 years, then the full price can come. But if the equipment is something that is going to be like for 5 or 20 or 15 years or 10 years, so then you have to make a calculation of pro rata depreciation for the amount of time that this equipment, this accessory equipment, will be used to support your activities. So this is the way to differentiate a little bit this equipment accessory versus equipment investment. I hope that is fine. Maya?
Thank you, Nelida, for that answer. We've got another question related to funding and other EU funds. And the question is, if our project idea is the result of a study previously financed by another EU fund, in this specific case they're talking about Horizon funds, can we apply to your initiative? So if our project idea is the result of a study previously financed by another EU fund, can we apply for your initiative? Over to you, Nelida and Zrinka.
Yeah, we do accept, because, the idea is that in your application form, you demonstrated is this part, the storytelling part of your project, in the innovation of your project, in the parts of the application form, where it says, what is always a section where you have to answer, or you can describe that your project is based on a study that the municipality has made to X number year to the local communities for justifying the proposal of your solution. This study paid by other EU funds, it can come. This, anyhow, is not part of the implementation phase, so it's not contravening the double funding rule that we have to be cautious about for the implementation phase. So whatever happens before or after the implementation phase, we really don't, it's covered by lump sum, so.
Very, very good, Nelida. Actually, I would just complement your answer with mine, because the study is the outcome on its own, which was already funded. So if you are not financing the study, the same study from the Innovative Action Project, you are actually avoiding the double finance, which EU funds are actually very much against. But the full application form containing a part of the result of the study as a project description, as a project application form, is basically not related to the outcomes which were already financed by the other EU funds. So this is actually, it's eligible and possible that you base your application form on the study in which the need for this kind of investment or this kind of innovative solution was expressed. Thank you, Maya.
Thank you very much, Maya and Zrinka. I think we have to stop this question and answer 30 minutes part, because we have reached those 35 minutes even. Thank you all for your participation. If we have not had the time to answer your questions, please address those to this email that we have for you, which is just, okay, you can contact us to the innovative-actions@urban-initiative.eu. Maybe we didn't answer those other questions because, time constraints, but as well because they were related to other topics like the application form or intervention logic or transfer partners, etc. So the aim of this session was really to make sure that you understand the finances principles and rules and to improve the knowledge, your knowledge about it. And there is one more slide of question that we have for you. Maya, please, this is one last slide of question to check with our audience. Maya?
Yes, thank you so much, Nelida. So our final Slido quiz question is, has your understanding of the finances of an EUI project improved? I hope we get, wonderful, 100% of answers so far. That's great. We're really pleased to see that. Nelida, I'll hand back over to you.
Thank you, Maya. So we're really happy to those answers. This really means that you, or the presentation really improve your knowledge and that the clarifications were made regarding the questions that you have on the funding principles on our Innovative Actions Strands project. And the idea is really to make you complete in knowledge to put together a good and sound budget for your application form. So let's move to the last bit of the presentations, which is going to be the support to applicants after the video transition we have for you. Thank you. So as support to applicants, here we have some, one last slide that sums up the whole application form pack with key documents and links, useful links that you should be revising. We advise you to revise when, putting your application together for this call. There is as well one online question and answer session left for the 7th of September. This will be happening from 10 to noon, which will be dedicated to closing question and answer session. Really generic. Registrations are already open. And why generic? Because this last session, you can ask the different questions left still pending for you on your side. It can be regarding application form, the intervention logic, the partnership, the clarifications on maybe some eligibility costs or expenses, or any doubt that you can have related to putting together your application form. Then there is still these one-to-one consultations that you can book for the month of September. These one-to-one consultations is 30-minute meetings that you have with the permanent secretary officers, where we give priority to main urban authorities. The purpose of this is really to support you on how to draft or how to apply for the funding that we are providing with this second call, how to define maybe the work plan, the intervention logic, how you are structuring your work packages, the deliverables, the identification of the outputs, and maybe fine-tune your transfer element or your comprehension regarding this aspect. Then the recording of this session will be available for you to review and share it with your partners. And all the presentations that we gave today will be, for the ones that registered to our online session today, you will be receiving right after our PowerPoint presentation, so then you can have this as a support material as well. I really believe this is all from us. Thank you all for joining us on this online event. Thank you for your participation to our quiz questions, for your audience questions, and for the 30 minutes and the participation as well, the attention that you gave us during these 2 hours. Thanks as well to all my colleagues supporting me today for delivering this session. Srinka, thank you very much. Maya, thank you for your help with the questions and being the voice of our audience. And as well to the colleagues, I have 2 colleagues behind the screens, Antonio and Nicola. Thank you very much for your support as well, and wishing you the best of the luck for putting together your application form, and hopefully you are one of the very few lucky ones or to be selected and be part of our second call and portfolio of projects for the Innovative Actions Strand. Thank you. It was a pleasure.